Stay tuned until the end because I do have a couple surprises as far as tickers going a little bit wild, perhaps this week. First things first, I want to say where we're at and then what the catalysts are. Make a couple of comments about Powell and the concept of who's driving what, and talk about some earnings, especially a few that I'm looking at and why, and what I'm doing with trading. So for bullish and bearish positions. All right, so let's start with the fact that we are at all-time highs. And I'm going to state a fact on the SPY as if it was some unknown stock, has nothing to do with the economy. This stock broke out on a weekly basis, which is what you're looking at, 1 week chart. And the breakout from the neckline that is at 459, let's round, 460, has a target that could be up to 100 points. So if you want a tangible value, 530 to 550 and 540, that whole zone, 530 up here, 550 and 60, they're very likely next stops unless something derails this rally. And derailing might be just a check back to the neckline of 460-ish, this candle from December 13th, just to come back and to touch base, to say, okay, yeah, this was a good footing, let's go and finish the job. So, all right, so I said there are a couple of wrinkles. The main one is the discrepancy between the weakness in thousands of stocks and the strength in concentration of mega caps. They are driving the rally, so the rally is not junk. These are quality stocks. So that's the discrepancy. The IWM needs to wake up. So that brings me to catalysts. We still have earnings. And we have a bunch of small caps reporting. For example, I believe on Monday, Palantir reports. Palantir might influence the small caps, Palantir like ARK Invest type company, to rally. And maybe they rally 4% and 5%. They can do it. I've seen them rally 4% in 1 day for no particular reason. Another catalyst is going to be the inflation conversation. There is a CPI, I believe, on Tuesday and a PPI on Friday. Double check those figures. Speaking of CPI, we had Powell on 60 Minutes just about an hour ago, and he had an interview, and they asked him about the state of affairs, the rate cuts, and all of that. All I heard was, I heard enough, and I turned it off because he declared victory over inflation. He said, at least it's no longer the worry of the people. And I disagree. Maybe the CPI is lower, but in reality, when we go shopping, I don't feel like there's anything lower. The milk is about the same, the eggs are about the same, things we use every day, they're about the same. So maybe it's because the CPI, they tweak this and they tweak that and they season this and they season that, they make it look good. I just don't see it at the store level, okay? Gas is still super expensive, at least in California. So it's a little confusing on that part. But it is a potential catalyst as to what the CPI shows and what the PPI shows. In addition, we have, as far as catalysts, we have a slew of Fed heads talking. The CPI cannot afford to be anything but perfect because they declared it a winner already. So the price action in the S&P is completely in the hands of the buyers. We would have one red tick and then they completely obliterate it and make a higher high. That is the definition of buying dips. Okay, so how do I trade this? As far as trading plan, if I have credit call spreads that are in trouble and I have 2 left, I suggested defending them, and I would stay in that defense. As far as on the long side, I would look for dips that are viable, and they're starting to come. There are, if you watch the videos I did for us with 110 tickers, 115 tickers, we did have a few that, and I put them in my list, that have fallen into levels of support that are at least tradable for the short term. If I take positions, I will share. So trading, okay. Investing, not for me. And if you force me, I would use some sort of a stock replacement strategy or a synthetic long. That's how I would do it. Okay, surprises. I did tease you with a surprise. The IWM needs to break last week's high. Otherwise, it's going to drift to 188, I think, by Tuesday. And that's a significant drop from now. It's like 194. And maybe to 186 to 183 by Thursday. And the other one, similar setup on Bitcoin. So if you're trading Bitcoin, I would be in the mentality of selling rallies in the Bitcoin to maybe retest the 39, 38. And if it doesn't succeed, then they might go to like 35, 36. I'm a trader of Bitcoin. I'm not an investor in Bitcoin here. I do have a core position. You know the story.